Good morning. Welcome to Core Services, Core Belief Series, Why It Matters. Today we're going to discuss CPAs and disagreements with clients. And I am John Coggle, and I'm your presenter for today's episode. So a little bit about Core Services. We are focused on audit and review services, primarily for condominiums and homeowner associations. We have a combined experience of over 40 years doing this type of work. And we also offer advisory services to work to help boards be more effective at their job of their role of oversight of management of their associations. So getting right to it, today's episode we're going to talk about obviously the Manafort trial and what some of the takeaways from that as it comes to being a professional and working with a professional regarding accounting services and bookkeeping services and also tax preparation, and what could happen and what might happen when there's disagreements. So obviously what we had here was the main thing was the people involved felt that there were things that were totally inaccurate about the tax returns and other reports, but they went ahead and did it anyways. And we'll come to what that real problem is in a minute. But their concern was they had to be sued by the client, or they were going to lose a substantial amount of money. I mean, Paul Manafort's businesses generated a substantial amount of revenue, no doubt. I mean, they'd grown to be fairly large. They never had internal accounting staff. They always outsourced to this firm. So yeah, why they feared losing that money. But in the end, they were actually charged as an accessory, and they agreed to testify under what's known as a grant of immunity. Basically, they wouldn't be charged with those crimes if they agreed to testify. Even with that said, the preparer was in fact terminated by the firm that she was also a part owner of, so she'll probably lose her equity position under the fact that she she was part of an illegal act. And more importantly, that firm name is now tainted. Simply the simple fact of the matter is the shareholder in charge was intimately involved in some poor decision making that put the firm in bad light. And so, A, how do you avoid this, and B, what are the potential ramifications when there are disagreements like this, and the choice is stay or go. So again, not good to get into the whole litany of the what are professional responsibilities for CPAs, tax preparers, and licensed tax preparers, all that stuff. Recognize the fact that CPAs actually have a duty to the truth. If a number is a number, there's a policy or accounting principle which says this is how you record it. We don't make numbers up and stick them in financial statements, in the books, in tax returns just because. They have to have some sort of basis in reality. A CPA, especially one who has to maintain independence, cannot advise a client against public policy. It's a hard position to take for someone who especially has to turn around and audit a client to advise them to maybe set up an offshore bank account and not report it. And more importantly, CPAs, again, especially when independence is an absolute necessity, such as an auditor, cannot take advocacy positions. They can't really represent a client in certain acts because then they are taking on a role of management. And again, tax preparers. Really, if there's an inkling that a return is just flat out fraudulent, you really should not be involved. I mean, you read about those stories all the time where a preparer makes up dependents to file a tax return to get the refund and then tries to run off. They're going to get caught. You're not supposed to be involved with a fraudulent tax return, and obviously you should not advise clients to violate tax law. There's one thing to say, hey, it's more likely than not you can get beyond this. There's another thing to say the law says this, but I advise you to go ahead and do this anyway. You're really not supposed to do that. And then, as I said, auditors, it's always about independence. Anything that could put you into the position of acting like management is against the rules. So what happens, especially in the sense of a CPA who is auditing a business, and you find something that doesn't feel right? Management's telling you one thing, the numbers are saying something else. What happens? Well, what you need to do is report to the appropriate level of management. So if we think that the bookkeeper is causing the problem, our job is to report it to the controller, that level of oversight. If it's the controller, our job would be to report it to the CFO. But again, when we're working with those small, closely held businesses, we don't necessarily have anybody we can go to, because I'm willing to bet that if the bookkeeper is doing something, the owner probably has instructed that bookkeeper to take a certain position. So you have to be very careful when you're working with closely held businesses. Even for us, for auditing a closely held business, our concern is, if the business owner is making a decision and we disagree with it, who do we report to that we think that they're taking the wrong position? We don't have anybody. We're stuck. We pretty much just have to withdraw from that engagement. And so, obviously, when we get down to it, management ethics plays a huge role in client acceptance and engagement continuation. As we're doing our investigatory work, if they're intentionally disregarding rules and regulations and laws, we may not want to take on that client. It's a big problem for us, and a bigger problem down the road if and when it comes to light. Because at the end of the day, if something is intentionally misrepresented and somebody else relies upon it, it is most likely going to rise to the level of some sort of criminal act, because you've got wire fraud, mail fraud. There's lots of ways to pull this thing in and say you did something you weren't supposed to do. And why is this important? Well, because disagreements are going to happen. So if you're management and you think you're talking to your accountant and they're saying, I don't agree, then document your position. Don't just have a verbal. Put in writing why you think you're right. Please understand that we are disagreeing with you because A, we're conservative, B, there's probably an accounting principle such as GAAP that dictates how things should be handled. So don't take it personally. It's a criticism of how things are happening. Most importantly, don't lie. Don't make stuff up that if we catch it, we're stuck in a position of either finding the appropriate level of oversight to go back to or withdrawing from the engagement. And recognize the fact that regardless of which party you are, this problem is likely going to come back and bite you in the butt. If your CPA fires you for this, understand that you're going to go out and hire a new CPA whose job it is probably going to be to talk to the old CPA that was fired, and they're going to go, so what do you understand why did you fire your client? They go, well, because they booked a bunch of transactions that didn't exist. Your new CPA is probably going to have a problem with that and won't let you get away with it either. If you decide to fire your CPA, I've had this problem. We had disagreement with management. Management came back and said, okay, well, since you can't see it our way, we're going to get a new firm. Same problem. It was an audit. The new CPA, the replacement, contacted us and said, okay, why did they fire you? Explain the problem. They go, oh, okay. So next thing I find out is they're requiring the client to do the exact same journal entry I insisted they make to clean up their books. They didn't win anything. In fact, it cost them more money because they had to pay me for the work we did up to that point, and then they had to pay the new CPA to redo it all. If you're a CPA and you're working with a client who acts unethically, please understand it is probably, just like with Manafort, gonna come back to bite you. If this one little slip, you could probably let them get away with, but the problem is it becomes a bigger and bigger problem, and you're tainted by it if you don't address it. And then finally, let's just be honest. If push came to shove and they get in trouble, they're going to blame you because you're the accounting firm and you should have told them what they were doing was wrong. So anyway, thank you very much. If you have any additional questions or have concerns about especially today's episode, feel free to contact us. You can find us on the web at core-acct.com. You can contact us on Twitter, or you can find us on LinkedIn. Look forward to talking to you, and we hope this has been informative for you. Have a great day.